Alright, so right now I'm just kind of recording a little video. I went ahead, I put down some sticky notes on my computer to go ahead and just be there for when I'm on the charts. This is what it looks like. Just a bunch of shit, talking, just like literally things right there that when I'm trading in the morning, there's no choice but for me to see it. Abundance mindset, my system and risk management, time frame alignment, and what I'm trying to do, what I'm looking for before I even enter. All right, I want to start on the higher time frame and look for price to manipulate a higher time frame PD array. And then once I see it manipulate that and react off of it, I scale down to the lower time frame of the aligning time frame, the higher to the lower, 1 hour to the 5 minute. And I look for an entry and I scale my position sizing in order to fit that risk. And if I have a bigger stop, I will have a bigger take profit. It doesn't really matter. At the end of the day, it doesn't really matter. You're still like your RR is still good regardless. So, and then at the bottom of that, when it says I am profitable, the setup comes to me. Then there's the time frame alignment of each time frame. Then there's my system with risk management. I want to see a higher time frame SMT put in. Usually comes from that manipulation. I want to see a breaker block form. And then I want to project my standard deviation. And then I will use market maker models for my structure for buying or selling, depending on what side of the curve it's on. 2 trades max, first trade wins, get off, set for first trade loses, de-risk 50% for the second trade, wins, get off, loses, get off. Abundance mindset. I don't need to take a trade today. I don't need anything from the markets. You need to detach. You need to genuinely just detach from the market. Detach from it emotionally. I don't need anything from the charts. I don't need anything from trading, really. I don't need anything. Like, in looking back at today, there's, a lot of things that went on, and I just kept getting cooked, bro. So I went long here, and I got stopped out right before it just went up. And then here, I shorted, because I saw we tapped into an hourly FEG. Boom. Stopped. And so, I married that. I could have cut that loss short. I mean, I wouldn't have been able to take another trade, but I wouldn't have been down so much on the day. Not only that, we have this 5-minute fair value gap here, 5-minute breaker, 5-minute. Honestly, this didn't inverse yet. But what do we have here as well? We had, this. We had, our breaker. And then, yeah. And then we have this higher time frame order block. Rejection wick forming here. You could have entered in off of here. Bang. And then price just went. And if you wanted to find maybe where we want to do his targets, standard deviation, mark that out. Stop here, below here. Generally, whenever we're up in profit this much, go break even. There's no point for it to come back to a loss. 2 standard deviations right here. This trade would have been in it for, so this was would have gotten tapped in right before noon, would have ended right before noon. About an hour in a trade. It's really this simple. Start on the hourly. What did we have today? We had this SMT put in right here with market open. Market open, we manipulated down. Go ahead and clear this out of here. Market open, we manipulated down. We tapped into this order block. Then we also tapped into this rejection wick right here. What did we do? We started to reject out of it. So when we do that, we scale down to the aligning time frame. Boom. Let me go back here just so Alright, there's a bunch of shit on this screen. Let me put this here. Change up the color a little bit. Let's do orange. There we go. Orange. So we scale down. we see how did price react when we came down here. Cool. We rejected pretty heavily. What do we form here? A 5-minute rejection wick. Sometimes, yes, you have this, but just like put your stop down here if you're really too worried. This is a swing low. Move your stop to cover this if you really want to. Or you can just cover the rejection wick. So once you have that, we get this right here. Boom. Or you could do it off of this leg right here. This leg is fine as well. But yeah, so we have our manipulation down. SMT. Breaker forms the moment we close over here. So this does form the breaker, technically. The only thing is it's not very strong. But then eventually we do come around, close, and then we tap into the breaker one more time before going higher. So we had that. Yeah, it's really this simple, bro. SMT, breaker, project. It's that easy. Move down right before we started going higher. Or, I mean, bro, like even this, something like this, or this. This lines well with this. Boom. And we wanted to go higher, so we did. But just use these things. You know how to trade. You know how to do it. Stop acting like you don't. You wake up in the morning. Don't sleep in. Don't do none of that. Just get up. Go make yourself a coffee. Go outside. Get some fresh air. Hop on the charts. Maybe open up your window for the trading session. And record the trading session. It's very important that you do that. So you can go back and rewatch. But that's pretty much today. We lost 600 on the day, but I just wanted to go over this. This is good. Only 2 trades. And so now we're going to kind of adjust it. We're going to de-risk 50% after the first trade if it loses. So yeah. But if you, like, just wait for 10 a.m. as well. Just wait for 10 a.m. 10 a.m. Waiting for it does not hurt. If you waited for 10 a.m., look, boom, open, start to go lower, boom, we tap here, yes, we reject out of here, so on and so forth. But yeah, so you have that. Use your confluences, have some confidence, stay in an abundance mindset, and just trade. You know how to do this. Detach from it emotionally. Being emotional is not going to help you. Sizing down has helped you a lot, keeping you from blowing accounts very fast. So yeah, just continue. Just trade the micros. Use your common sense. You know what to do. And see you later, going.